Hey, man. Good to see you.
Good to see you. What's going on, brother?
I've been busy since we last spoke. I think you've been pretty busy as well.
Well, last time I saw you, we've had our innovation summit. Obviously, we had HYROX in New York. Um, Getting ready for a lot of stuff this fall. So it's been a busy, no rest this summer.
Why do you do the summit? What is the giant purpose of the summit?
I think there's a few things. First of all, to be successful in events, you need to be a tentpole moment, right? You just can't create something because you want to create it. You gotta, those events come and go. You gotta be one or two in a category. Um, I think one from a brand positioning perspective, right? Anyone could hide behind a screen. And so what an event does for a media property, it really legitimizes it. If you could walk, I could tell you, hey Matt, I got 100,000 subscribers, I got every CEO, and you could say, oh, okay, maybe. But if you walk into a room and you're like, holy shit, look at all these CEOs, look at all these investors. All of a sudden, I don't have to say anything. The audience speaks for itself. Now, the second thing is, what do people ultimately want at the end of the day in B2B media? Yes, people love news, they love insights, and they definitely help them make better informed decisions. But ultimately, the business is predicated on one thing. Are you helping people make more money or save money? And the best way to make more money is to introduce them to prospective clients or prospective capital partners. So if they could go to an event and they could see hundreds of their potential clients right there and have meaningful conversations that result in new business, you don't have to sell anything. It becomes a self-fulfilling prophecy. The event will get bigger and bigger every single year.
Hey, hang on. This fucking thing just came unplugged. Oh, my goodness, dude. What in the heck just happened? Two seconds.
Okay.
All right, go ahead.
I hear you.
Hey, go ahead. Talk.
Can you hear me? Can you hear me?
You froze on me, though. Yeah, you froze on me for a second.
I'm here.
Okay, you're slightly behind now. So, what makes you launch a media company in the first place, dude?
I mean, insanity. I'll tell you, there's easier ways to make a living, and I don't think I have to convince you otherwise. I mean, you're in it. A lot of this is I don't want to say by accident. I was a supply chain guy. I spent the first 10 years of my career. All my buddies from NYU, everyone went into finance. I'm like, oh, I want to go into fashion. I don't know why. I start working at an apparel company. I'm like, I don't want to be Willie Loman. That's death of a salesman for those that may not know. And I meet this guy, and he's the one making all the clothes. He's got offices in Bangladesh, Pakistan, China, India. I'm like, oh, I want to be like you. And what? And this is, early 2000s. Not everyone had an office in Dhaka. Like, sourcing and supply chain, became front page news during COVID, but it was still a pretty fringe industry, especially for people in America. And I'm like, I want to work for you. Great. Start working for the guy. Too many stories for this one episode. Got exposed to the world, and you get to see parts of the world that very humbling, and we should all be very fortunate. Places like Bangladesh, where the minimum wage is $60-$70 a month, and it's 120 degrees, and people are working in factories all day. It's a difficult life. Puts things in perspective. But nevertheless, in 2008, there was a cotton crisis. No one understood that the cost of cotton went up every single day. And if you quoted someone on a Monday, by Tuesday it was more expensive, and you would want to confirm the order by Friday. It'd be, hey Matt, that 210 is now 270, and it was. So I was like, how come there is no Bloomberg of supply chain? So I'm like, I got to start some type of newsletter so my clients know what's going on. I didn't think about a media business. I'm like, I just got to inform them. Start this, and it just keeps growing and growing and growing.
Just as an email list, or how did you start?
Yeah, and I literally used fake names, and I aggregated international newspapers, and I didn't want people to think it was me. Like if Goldman Sachs had investing advice, it'd be propaganda, right? I didn't want people to know Eddie from Synergy Sourcing is doing this. I just want to know, here's a sourcing journal. As I call it, sourcing journal. And it started to really become something. People started, and then I'm like, well, I can't how am I going to make a living sending out a newsletter every day? So I put up a paywall, and that was like, I think Netflix still had CDs in the mail.
Right.
And people started subscribing, and then I started selling advertising. And everyone's like, you can't compete with WWD. You know, Penske owns it. It used to be a Disney product and a Conde product. I'm like, they'll buy me one day. And, you know, I said that kind of joking, but fast forward to 2017, Penske bought me. And then I become part of the Fairchild Group, which is WWD and whatnot. Then I watched Jay literally buy Billboard, Rolling Stone, South by, Golden Globes, Art in America. He's got Variety. I mean, hats off to him with the media empire he's built. And, you know, there I am. My earnout's over after 2 years. You know, you get paid out in year 2. In year 3, you know, you're lagging a year behind. And I was like, every industry has their publication or record. Where is it in fitness and wellness? And I had that same gut feeling I had back when there was that cotton crisis. I'm like, okay, a little bit harder because now I'm going home as a president of the division and I'm getting into MailChimp and starting the email again. I'm like, Jesus, I'm back to this shit. And again, people started signing up. Hey, you want to advertise in this? And I'll tell you, I probably quit this thing 10 times over. For 3 years, people don't realize, for 3 years, I was sending yesterday's news tomorrow to myself. And that's part of this thing people don't realize. I don't want to say lost. I invested hundreds of thousands of dollars and hours and eventually if people see things enough time, it starts to become habit and they start to become familiar with it. Oh, I see you wrote about it. Can you write about me? And another one.
What's yesterday's news tomorrow?
Meaning like, I didn't have a staff. So I see a story. By the time I promote it, it was yesterday's news, and I'm writing about it tomorrow. It was right. You're not breaking anything. You don't have, you have freelancers doing stuff. But anyway, FOMO starts to set in. Oh, I saw you wrote an article all about Matt. Then you write an article about Tom. Then you write Joe. Then Kimmy. And then all of a sudden, people are like, I want to be in there. And then, so then I had to make the decision to go all in. So I had to leave Penske and essentially start again from scratch. I had to and build it. And here we are.
So why do you care?
Be more specific.
Why do you care? So the fitness industry needs a paper of record, or why do you care? Why do all this?
So I'll tell you, when I started Sourcing Journal, I did it because I had a problem that I was trying to solve. Right. And so it felt very natural. When I started this, maybe I'll regret saying this on a recorded line, but I thought it was more of a business opportunity. Okay. I'm like, okay,
nothing wrong with starting a business because you wanted to make money. I'm just asking.
Well, again, if I just wanted to make money, I'd probably get into private equity. I'd probably, trade stocks. I'd probably get into real estate. You got to remember, if you take a $10 million apartment, you get 3%. Your currency, you manage $1 billion and you get a 2% carry, 2%. You're selling $2.99 subscriptions. You're selling $10,000 ad deals. To make millions and millions of dollars to cover the overhead. It's a lot of millions and millions of dollars to produce these things. The event in New York costs practically $1 million before you open the door. It's a racket. So, but I saw it was an underserved community. I saw that there was real deal flow happening, a lot of momentum happening. I don't think you don't turn on CNBC, you don't open up the Wall Street Journal, you don't see headlines about fitness and wellness every single day. So I had that gut feeling I think there's a good opportunity. And what starts to happen is I'm a big believer you don't follow your passion. I think it's horrible advice. There's two schools of thought. Follow your passion. Another school of thought, whoever told you that is probably an accountant.
Right.
But I will tell you, the better you are at something, the more passionate you get. All day, all night. I mean, how did we meet? We met over this. We had a nice conversation over coffee and breakfast. Then we took a walk. We're talking. For that day, we talk. Oh, do you hear this deal? You hear about this? There's no money exchange between you and I. We're genuinely interested and passionate about this industry. And so what started as a business opportunity has now become, my life. And, I have another business that's evolved out of this because people hey, you're not a fitness guy. You're a retail manufacturing guy. Can you make my clothes? And next thing you know, we have another business that's ActiSource. We're making clothes for thousands of gyms because I saw another problem. Gyms need 12 pieces of this and 5 pieces of this. And they don't need thousands of pieces. They're not going overseas. They don't have design departments, merchandising departments. So again, what started out as, a mixture of opportunity meets subject matter expertise. It's really cool to walk into a Barry's or to walk into an F45 or to walk into a yoga. And like, shit, man, what did I make? 12 pieces? But it's cool. Like, and so that's not going to be, I'd much rather run Fanatics and be making every single NFL jersey, but it's a version of the same. You know what I mean?
So every day, because I get your stuff and everybody else's stuff, every day I get excited because I think I have job security because of the gazillions being put into fitness. I mean, every article I read is this tech company, this fitness company, just tons of money. And I know the purpose of it. Like, it is PR, it is spin, but these are facts. Like, these are billions of dollars being invested. Do you feel that? Do you feel like, holy shit, 2026 is X times 2024?
Look, it's one of the first things you and I talked about. There's a lot of money flowing into the space. There is a lot of institutional money. There's a lot of new talent, outside talent, people that have made big careers in retail, consumer product goods, entertainment, fast food, stuff like that are saying, hey, I'm going to go run this company now. I think it's really exciting. I think there's a maturity and sophistication that needs to come into this industry. So all things are signaling yes to that thesis. However, you got to remember, when money flows in and something is hot, everyone's trying to wellness wash. Oh, this is a wellness water. This is a wellness drink. This is a wellness cereal. This is this t-shirt's wellness. Okay. And so you raise money with that. I mean, I watch this with sustainability. Everything was a green company and an ESG company. And so, this is a sustainable t-shirt. Now that's got to be, well, at the end of the day, like, is it really going to resonate? So the majority of these companies won't succeed. But this is a gold rush. This was my opening remarks at the summit. This is a gold rush moment. And there's going to be a lot of people that make fortunes. And whether you're the gold, whether you're the shovel and the pick, whether you're the one, writing about the gold, whatever it is, there's a lot of opportunity. But also remember, it's extremely fragmented. So the amount of billion-dollar companies that you're not going to be seeing headlines like, SpaceX here. I think you're going to be seeing a lot of 8 and 9-figure companies emerge. And then is there going to be a conglomerate? We see with Playlist, obviously what they've done with MindBody, ClassPass, eGym. But there's really no LVMH caring of this industry.
But I mean, that kind of brings me to, I just today, this happened, like, between the time that we set up this call and this call, this thing happened with FitLab. And FitLab was like, we're buying everybody. And then they already dumped the Nike gym. And then now it looks like this Ragnar piece is about to fall off. So people are like, oh, well, private equity ruins everything. And I'm like, well, I don't think people set out to buy something just to ruin it. So it's been pretty volatile here these last couple. I mean, listen, anytime I see a gym open up, we might have talked about this at breakfast. When I see a gym open up, and I'm going to use the worst case example, it's just surfboards. You get on a surfboard and you work your core. Now, in my mind, I'm like, yeah, that's going to last 18 months maybe. And there's every version of that. Bikes and rowers and whatever else, right? So this whole idea of the fitness boutique, and then, well, no, that's not working, we're going to put this money somewhere else. It seems to not matter as long as fitness is the thing.
Look, there's a few headlines in all of this. Entrepreneurship is back in style. Okay. The amount of LLCs that have been opened. I mean, I forget who, I was reading some article, like there's a lot of new people, solopreneurs, small businesses that are emerging, whether it's the Shark Tank effect or whatever. I think we have romanticized entrepreneurship. It's a miserable life. I think it's a miserable life. Now there's benefits, but inherently it's a tough life. Now it's a lot easier to open a restaurant, open a gym, start a t-shirt company than it is to buy buildings, than it is to drill for oil. And so what happens, I think I really love that. It's something I'm passionate about. Oh, it's $500,000. I could get an SBA loan. I could take money out of my 401k, all high risk, at dangerous logic, but people do it. And so when the barrier to entry is relatively low, a lot of people flood into the market. I agree with you. I don't think private equity sets out to say, I'm going to buy this to lose money. I've never met any entrepreneur that says, my goal is to lose money. I think what happens, though, is I give a lot of respect to people that know when to pull the plug. That when they know it's like if you have a portfolio of 10 businesses, if something is underperforming for a certain period of time, you say, this is not right for us. Let's invest in these other 8 things. Now, how do we qualify success? And so this is one of the things I had with Jay Penske. I watched him go from a B2B player to one of the probably the largest digital media company in the world. His appetite was for bigger and bigger properties. A $5 or $10 million property didn't interest him the way it did, 10 years before. And so I think what's happening is if one of these ideas don't materialize in a certain amount of time, these funds would rather put energy and money into something that will. And unfortunately, that means things get closed down. People lose jobs. It's not personal. It's just math.
So, when you said that it's fragmented and there's a lot of things, but like I said, there's actual companies that are making, like all these equipment companies, for example, right? They're investing more and more because they know that people need more and more equipment. And even if gyms go out of business, you know what I'm saying?
So I think some of the most successful companies are things that get no headlines. If I told you about CR Fitness and Undefeated Tribe, most people say, who is that? It's 2 of the largest crunch franchisees. These are like 9 and 10 figure valuations. Monster companies, very, very profitable, very strong EBITDA, private equity backed, amazing operators, amazing organizations. But what gets the headlines, and part of this is we do write about them, is at home Pilates reformer, at home connected bench, at home this new supplement company backed by a celebrity, and equipment is extremely difficult. There's probably a 4 or 5 companies that do everything, and then you have all the challenger brands that are trying to take market share. Very, very hard.
We met because of HYROX, and you did do your first doubles.
Yep.
And how did that go?
Well, I didn't train at all. I never ran 5 miles in my life. I threw 5 of those balls up, and I'm like, why is it not? It says 0, and the woman behind me, you're not going down far enough. So I probably should have done a couple practice runs.
Right.
But what I realized about 5 minutes in was no one cared. And I very quickly realized that I'm not racing against anybody. I don't know if the person is a lap ahead or a lap behind me. And I calmed down, and I realized the amount of people that reached out to me, congratulating me, let's do one together, so cool you did. No one has said, what was your time? And so I give them a tremendous amount of credit because they built something that is very powerful. It's not about the run. It's not about the farmer's cat. There's a real brand. There's a real community around this. There's a lot of social cred. It's cool to say you did it. You wear those pink sneakers down the street. Oh, wow. That's a HYROX. That's a HYROX guy. And so I have the bug a little bit. I was texting my buddy Kenny today. I'm like, hey, man, I was doing this in the gym this morning. We're going to shave 30 minutes off our time next time.
Right.
Yeah, it was painful. I mean, that's not something you just do without any prep, but I did it. I'm alive to tell the story.
So what they seem to be doing right from where I'm sitting is they have really been focused on doing that. Mo used to famously say, we want this $200,000 event to feel like a $2 million event. And now they want it. I think they spend even more, and they want it to feel like this. And they've done that. And for the most part, I've stuck to that. I think where people go wrong is they do think, well, now we do need to take over. Like, they do an affiliate program, but they do think they need to take over. Okay, let's launch our own gyms. Let's launch our own apparel. Let's launch our own equipment. They seem to not be doing any of that stuff. They're wisely partnering with Center and whatever. What do you think the long term, when it's not as cool? Because Tough Mudder used to be super cool too, right? When the pink shoes isn't as cool anymore, what do they need to do to ride it out?
So there's a few things there. It wasn't always so hot. everyone, like I said, like I was sending emails to myself for 3 years, and no, you came out of nowhere. No, I didn't come out of nowhere. I was doing this for a long time. 5 years ago, they were giving tickets away, right? And so it's part of this is that relentless, maniacal, I believe there's something here. I believe there's something here. I believe there's something here. And that's why a lot of new upstart events are going to fail. It's not because there's maybe not something there, is they think that they're going to launch it. I wrote an article, build it and they will not come. And that was off the back of me starting something when I was 21 and losing, I think it was $100,000 at that time, someone else's money. And I realized I spent all this time worrying about the logo and this and this and this, and then no one showed up. I'm like, oh, okay, well. And so I think, and I genuinely believe them when they say this, they are supportive of these other events that are emerging, because their thesis is competitive fitness is a growing sport, it is growing, and we are the NFL. So we want kids on their front lawn throwing footballs. We want people playing tag football, flag football, the arena football. As long as they're the NFL, they don't care that there's a Canadian football league, there's the arena football league. We want kids playing college football. And you know what? There's a big economy around football. And I think as long as, and you know the personalities, as long as they remain NFL, they're going to be okay. I think the way they build the sport is exactly how they're doing. It is a open source community. I think the other analogy which I like is that when you go to imagine going to the driving range and never having a golf course to go to. That's kind of how we've been going to the gym this whole time. We go to the gym, I feel good. Oh, my biceps got a little bigger, great. Now it's like, well, now I want to go to the gym to train, because then I want to go do this and say, okay, we shave 15 minutes off. Matt, I know we can do better. How about you and I? We go to Scottsdale in 6 months, and let's do it together. All right, bro, we're on. We train. Like now we're training with a purpose. We're going to the gym with a purpose. And so the more people that do this, the more people that are going to want to do it. And maybe it's not all HYROX, or maybe I want to do Apex, maybe I want to do Xenom, or I want to do Super Age, or maybe I want to do this, that, Ethics. But the more people that, again, throwing that football, the more people that are going to start interested in the sport. The question isn't, does HYROX become cool? Does competitive fitness lose its? Does it actually become an Olympic sport? Does it actually get mainstream television coverage? If that's the case, also I think the way they could remain cool is they got scarcity going in their favor. You and I want a Rolex, can't get it. You got to stay on the list. We could go across the street and get a Breitling. And so that doesn't mean Breitling's cheap, right? It's still a very expensive and quality watch. But I'm just saying is that people get frustrated that, oh my God, I really wanted to do Boston. I couldn't. Oh, I really wanted to do Atlanta. Now there's also a point of that when you get too frustrated, you say, screw Rolex. I don't want that anymore. I'm going to go buy the watch across the street. So if they make it so hard, people will start going to other races.
You mentioned these companies, but my biggest question is always, what's taking them so long and where are they? Because of all those companies you mentioned, they've either done one event and like there's no number two. There should be a number 2, 3, and 4 trying to be HYROX. And there's DECA, which is a Spartan product, but I think DECA suffers from what I talked about earlier about trying to do everything. Spartan kind of wants to do a bunch of everything instead of focusing a lot of their attention on one. But there's not, DECA's numbers are like 1,000 people, right? And HYROX does 20,000 minimum on a weekend now, 3-4 day events. So where are the rest of them? That's what I've been saying. All those ones you mentioned have done one event. Ethics, Apex, Super Age hasn't done one yet.
Part of this is so incredibly difficult. It's so incredibly expensive. You're talking multi-million-dollar productions. That's what I say. Like anyone can start a website. It's much harder to go rent Center 415 and build out what we did. Anyone could start, a couple hundred people are going to come to a competition, whatever. Build out, take arenas, build that out. Now, the moat is getting bigger and bigger for them because it's harder and harder and harder to they can launch it to a new market and they have the infrastructure to support it. You know how many trucks are showing up with equipment
Right. But if you and I want to start one, if you, me, and Kenny wanted to start one, we wouldn't start with the Javits Center. We would start with something much smaller.
Right. And then you have to have the working capital or the patience to keep rolling it over, rolling it over, rolling it over. I don't know how to answer the question because I don't know the business models of all these people. Are they event-only companies? Is this all they're doing?
But so what we've seen is these sort of inside out ones, right? So F45 said, okay, we're going to do this challenge twice a year called Peak 500. And that's kind of their version of it. And then TRX just launched one, right? So we're seeing that. But I think the smart money, right? Which if I had enough money to do smart money, I would align myself with some folks inside the industry and say, we're not going to catch HYROX. Like, we just want to launch a solid business that we can all do, right? And I know that it's not just about launching it. You do have to execute. You have to do 100 things right. But even Athletech said they were going to come here 2 years ago. And it's like, get on the stick, man. People are hungry for this stuff. And they waited to get some Adidas money. So again, I think, and there's another one, this thing called Fit Stop Games. They're already a gym. They're kind of launching a smaller version.
But the question is this part of this is I see someone else doing something. Let me recreate it. So again, there's a great book by Gene Pressman called Chasing Cool. Apple didn't say, I want to make a new Walkman. They created the iPod. Remember, the Zune didn't work.
I do remember the Zune.
The Zune is an MP3 player. Why did the Zune not work? But you could say, well, they both played MP3s. You can't chase cool. And that's what a lot of people are trying to do. You're saying, oh, let's just create a challenger brand and wrap it to look a little bit different. But there's inherent coolness to HYROX. That's what people have to understand about great brands. What makes the watch yes, it's part movement, but there's a brand there. People will wait on the street for an hour to go inside the store to say there's nothing there. Oh, and we're going to call you in a year and tell you it's 30% more money. And you got 24 hours to buy it. Like, you would say, who the hell is going to do that? So whether it's the Fit Stop games, the Alpha Fit games, the Peak 500 challenges, to me, these actually are great for HYROX because what it's doing is F45 is creating a platform for their community. They're finding a way to get people excited to train, to evangelize that community. Those are within the four walls of F45. But the more these people are doing that type of stuff, now don't want you. If I really have if I play golf this Saturday, I'm like, oh my God, Matt, I shot 79. I want to play the next day. Maybe I go to a different golf course. So the better you get at this, the more you're going to want to try other stuff. So I think this benefits. I look at that as slightly different. That's very different than an F45 saying we're going to invest millions and millions in dollars, rent out the Javits Center, and create something different.
But these companies in the UK and Europe didn't start with millions of dollars. They're starting smaller and they're growing. So I don't know how familiar you are. Like, have you heard of Metrics, for example?
Yeah, of course.
Okay, so like those companies and Turf Games, just a little more CrossFit based. But these guys, they're putting some people, again, they're not doing HYROX numbers, and I don't think they have to. But
No.
The fact that those companies haven't moved here or we haven't had our own versions is what surprises me.
Look, sometimes people know they know their limitations. Sometimes people know their market. Like if I said tomorrow, I'm going to start an Athletech in Asia. I used to do an event in Hong Kong. I didn't know which side of Kowloon I was supposed to do it on. I needed to have a local partner. If you say, Eddie, I'm going to do an event. I got an amazing venue in New York. Where is it? 187th and Park. I'd be like, that's not a good location to have. You know what I mean? Not because it's whatever. It's like, you got to know the market. You got to know what street. Oh, I got a venue in Long Island City. Oh, that's not pretty close to Times Square. Like, you sure that's the right place to do it? So if you have a great business in the UK, maybe let's just stay there. Like, I don't think it signals that they're not everyone has to go across the pond to be successful. It's a question really for these operators. Are they not well funded? Do they not have the infrastructure? You got to remember the thing about events, and this is what I was complaining to you about at breakfast, is you got to pay for all this stuff up front. You got to pay. It's a lot of working capital. You're basically talking about, for you to have a dozen events going on at a time, or even 3 or 4, you got to have money to lay out all of them up front. And then it's a big working capital constraint. So if you do one event and it's profitable, you're already putting taking that cash and taking that to hold the spot for next year on that core event. So I think what happens is people do 1 or 2 and then they have to raise money, or they need some influx of cash because it's hard to scale these things. It's not like, oh, I just had a successful event, now I'm going to launch 10 of them. Where are they supposed to? How they floated?
Well, and I know a bunch of them won't last. I just want more places to go. I just want more races to do. What do you think? What do you think Whoop did correctly? Because again, everybody wants to be that.
I think a lot of it's timing. I mean, a connected device, a connected wearable, is it that unique of an idea? Every day I see there's a new, you put it in your ear, you put it on your toe, you put it on your wrist, you put it on your chest, right. You stick it in you. I think it's a great product, but I think it was great positioning, the right athletes. I mean, it's a signal. When I see someone wear it, you kind of know they're athletic. You kind of know they're into fitness. They care about themselves. So, I mean, Fitbit was around. Why is Fitbit not cool? What is it the Oura Ring? Is it the Ultra Human? Like it's hard for me to say. He knew how to, well, Will is a great marketer. He knew how to raise money. He created a great product. He was early to the market. He rode that wave. A lot of things happened for him.
But he's not like dynamic like you.
Well,
so when you say great marketer, you just mean he had good people, but he's not like, I would call him a salesman.
No, but sometimes, again, you have to know your limitations. Like, if you put me in front of Excel for too long, and you want to see, I got 100 letters that I haven't paid these New York state of Texas. I go crazy with this stuff. I have to give this to my accounting department and say, hey, go call Avalera and figure this out. So if he realizes what his strengths are, if you're a great engineer, at the end of the day, Steve Jobs didn't build the software, Woz did.
Right.
And then Steve Jobs is a salesman. He's a marketer. So I used to turn on golf, and all of a sudden you watch Justin Thomas swing the club. Oh my God, his heart rate's going up. And Whoop was tracking that. I think they don't do it anymore because they got annoyed that the golfers didn't want to show they were, a little bit nervous going to make a putt on the 18th. But that was great marketing. That's great positioning. But you got to remember, so much of this is timing. If you were to start Whoop today, would it be successful? If I wanted to start Athletech today, would it be successful? I don't know.
Well, just because there's more competition, et cetera.
You also need an incubation period. Yes, people inundated. There's too many products now. There is something with the right place at the right time. Now, there's table stakes. He has great technology. Certain things have to also be there. He has a great product, and he has great positioning, and he has the right capital. Some of these valuations are crazy, though. I don't know how it's worth billions and billions of dollars. But again, that's the financial markets say that's what it's worth, and let's see if it materializes.
So what do you want to What do you want to do? Do you just want to put on keep putting out a quality product, and then maybe you put your event on a couple times a year? Do you think long term that way?
I work with this business coach, and we always talk about keep doing the next right thing.
My dad used to say that.
So it's great advice. So there is a dozen things that are on the table right now. Do we buy another media business? Do we launch another media business? Do we do it in this category? Do I do it do I want to start Cement Journal, or do I want to buy hybrid fitness? Do I want to invest in a fitness equipment company because I have the market to promote it? Do I want to buy a trade show, launch a trade show? Do I want to open a fitness gym? Do I want to buy a fitness gym? Do I want to invest in? Do I want to start a fund? Should I be a partner in a fund? Should I invest in a fund? What's cool about the media is all these opportunities come to you. You got to know what you're good at and not good at, because a lot of them sound cool, but they're probably not right for you. And I only have so much time. So I'm getting very comfortable saying no to most things, though it sounds exciting to me. Do I only want to have one media product? No. We have 3 businesses, but there's still a lot more to do in ATN. Like, we have just barely scratched the surface. So I don't want to dilute my focus too much. Could there be 2 events a year? Yes. Could there be 3 events? Yes. But not the way you're thinking about it. It's not let's do 3 ATN summits. It's, is there a market for independent operators? Is there smaller events just for CEOs? Is there investment conferences? Like, it's you can't just do the same thing over and over again for the same people.
Do you go to events like yours? Do you go to other conferences to shake hands and
Of course.
Of course. So, like, where have you gone recently that you enjoyed or got something out of?
Well, enjoyed and got something out of is a different answer. You got to remember what's hard.
One or the other. Pick one.
But here's the thing: you got to remember, I'm a tough critic because nothing is really new to me. So all the time, I'll say to someone, "Oh, what do you think? What do you think of Matt's keynote? Oh, he was fantastic. I loved him. Really? Because I heard him say all that stuff over breakfast. You know what I mean? So it's like, but I got to remember, not everyone has access to all the CEOs and all the people. So for them, it's like, oh my God, I got an opportunity to hear this. Oh, Pilates is trending. Wow, I didn't know that. You didn't know that. Right. You know what I mean? So, like, I don't want to display. It is so hard. And I say it because I'm very friendly with a lot of the other, what would be perceived as competition, because I say I need you to be successful. I need this industry to see value in events and value in information, a value in trade shows. I go to FIBO, I go to HFA, I go to Beyond Active, I go to Connected Health and Fitness. I go to smaller events. You got to be a student of the industry. You got to be a student of the industry. If you're not, and you also have to be on the ground. People ask me all the time questions, and if I don't, the difference with supply chain is I always felt like someone could say, well, what do you know? You've never been to Karachi. Yeah, I've been to Karachi like 50 times. I don't want anyone to ever say, well, Eddie, what do you know? So I've had to immerse myself in this industry and really, really become a student over the past 5 years. So I will continue doing that.
How big is the company now, like employees wise?
We got about 20 full time.
Okay.
You got about another, dozen that are, whether they're contract or, fractional. We also have other businesses, so there's more employees there. So it's small if you're comparing it to Whoop or HYROX, but it's definitely it is small if you compare it to Murdoch, but it's real. It's real. It's expensive to run.
No, I can imagine. All right. Well, listen, I'm sure we'll do this again. We had a great chat over breakfast, and I thought you should come on the show. And I think what you do is super cool. And I think we'll cross paths.
Yeah, absolutely. I love what you're doing. One of the reasons I reached out to you originally is I believe if this is a sport, and there's Golf Digest, and there's a publication again for all the different sports, and you turn on ESPN and there's shows for all the different sports and announcers for all the different sports. Then there needs to be media and analysis and commentary for competitive fitness, which is what you're doing. And I think it's tremendous. And I think that as long as this channel continues to grow, you're well positioned. So I'm a big fan of what you're doing. Just got to keep going at it.
All right, man. Let me take off record.
Okay.